What does the new amendment in the finance bill mean for mutual fund investors?
Yes, Decoding Sahab, it definitely means a lot. This amendment actually eliminates several categories outside the gamut of the long-term capital gain and the indexation, brings in the umbrella of Section 50AA on several classes. Apart from liquid fund, I think liquid fund most people don't buy from a 3-year perspective. The rest of it all gets impacted. This is the first time I've seen prospective application of a certain section like 50AA is going to be prospective 1st April onwards. I've never seen one scheme of a few fund having two different units being taxed differently. So it has a large impact. Today we have just about 60 lakh unique debt fund investors. That was supposed to be expanded to a larger universe, given the affinity towards debt for an Indian investor. But I think that's going to be definitely dented going forward.
For a debt investor, one huge draw was benefit of indexation, but it is also about asset class planning. So while indexation benefits are gone, but I'm sure debt schemes and debt investors would be cognizant that when you're investing in debt market, you're also taking a bet on an instrument. So that basic matrix does not change.
Yes, Nikunj, it doesn't change at all because taxation is the last criteria on the basis of which an asset or a vehicle should be chosen, point one. Point two, I personally think always taxation is never at an instrument level, it's at a file level. Let's assume in my house, there are 3 files, right? My wife, myself, and my child. There are 3 different files. Instruments by standalone can't actually tell you what tax you will end up paying. Because even if you have short-term capital gain, it's not interest income. So Section 73, which allows you to set off several things for 8 years, can be used. Second is in the new tax regime, for example, if I'm investing, I will invest my debt investments from my child's portfolio because he does not have an income. So up to 15 lakhs, the taxation is as little as 10% in the new tax regime. So I'm not too concerned. For a retail investor, I work backwards for about a 10 crore portfolio as well. This will not materially change the merit of having that instrument in one's portfolio.
If you have to weigh in, let's say, the advantage FD versus advantage fixed income, while we are discussing and debating that this entire new resolution, this amendment is going to be beneficial for fixed deposits, do you think totality it may not actually happen that way?
Because I subscribe to what you just said. It will not change materially the love for FD or debt funds. I was reading one of the reports, it says that 1 crore 70 lakh crores is there in FDs. It is but apparent that in spite of having interest income, if FDs have had such a pull, that automatically implies that quite a few people are not worried about interest income because they don't fall in the income tax slabs of the highest rates. Will it impact the love for FDs of an HNI? I think they will be more keen for an FD, but I think most of India is not earning more than 15 lakhs, and especially a family of 4 is not. So I don't think a large flight of capital from debt funds to FDs is going to happen. FDs had the larger portion. It had almost 10 times the portion ex-liquid than debt funds, in spite of having a tax disadvantage of interest income, which does not get Section 73, you can't gift it to a major child. FDs are non-transferable. MF units are transferable. So you can, as a family, always manage the tax, and your CAs can very easily help you. Even if you have a 10 crore portfolio, I think the tax will not even change by 2-3 lakhs a year. Even if you are a 50-50 investor between equity and debt, I think people will try and combine these. Most people have 1/3 in equity anyway. So industry is going to create different funds, which is going to combine these two. Most investors have at least 35% in equity anyway. So the industry has to calibrate their product offering to make sure that this tax disadvantage doesn't remain. And arbitrage, I'm sure, will now form a part of most debt funds.